Ever wondered how to make your money work for you in the realm of real estate? Well, investing in real estate can be a fruitful endeavor, potentially bringing in lucrative returns and even creating passive income. But for beginners, the journey can seem complex and intimidating. So today, we're demystifying the process, providing a step-by-step guide to real estate investing for those just starting out. Firstly, it's essential to grasp what real estate investing is all about. It's the process of buying, owning, managing, and potentially selling real estate for profit. There are various types of real estate investments, including residential, commercial, industrial, and mixed-use properties. Now, on to the tips for those just dipping their toes into the world of real estate investing. Begin with education. Familiarize yourself with different types of properties, market trends, financing options, and local regulations. Knowledge is power, and in real estate investing, it's the cornerstone of success. Next, set clear goals. What are you hoping to achieve? Maybe it's generating rental income, flipping properties for profit, or banking on long-term appreciation. When starting, it's wise to start small. Consider a single-family home or a small multi-unit property. This gives you a chance to gain experience before moving on to larger investments. Location, as they say, is key. Research and select properties in locations with growth potential and demand. Budgeting and financing are critical aspects. Determine your budget, secure financing if needed, and account for all costs, including purchase, renovation, and ongoing expenses. Risk assessment is another crucial step. Understand the risks associated with real estate investing, such as market fluctuations, property management challenges, and unexpected costs. Diversification can also be a strong strategy. Investing in different types of properties or in different locations can help spread risk. Calculating realistic cash flow projections is a must. Factor in potential rental income, expenses, and expected cash flow to ensure the investment makes financial sense. Building a reliable team will be invaluable. Establish relationships with real estate agents, contractors, property managers, and other professionals who can provide insights and services. Before purchasing, conduct thorough due diligence. Research properties, conduct inspections, and review financials. Consider the long-term vision for your property. What's its appreciation value? What potential does it hold for future development in the area? Decide your approach to property management. Will you handle it yourself, or will you hire a company to take care of it? Stay informed. Keep up to date with market trends, real estate laws, and economic factors that could impact your investments. Understanding tax considerations is also important. Be aware of the tax implications of real estate investing, including deductions, depreciation, and capital gains tax. And don't forget your exit strategy. Have a clear plan for how you'll eventually exit the investment, whether it's through selling, refinancing, or passing it on to heirs. Patience and discipline are key. Real estate investing is a long-term endeavor. Avoid making impulsive decisions based on short-term market changes. Lastly, never stop learning. Stay engaged in real estate forums, read books, attend seminars, and network with other investors to expand your knowledge. In conclusion, real estate investing can be a rewarding venture when approached with careful planning, knowledge, and strategic decision-making. So gear up, get educated, and dive into the exciting world of real estate investing.